Ed, let's talk about the third quarter, specifically the demand that you've seen. It's not slowing down, is it?
No, it's not. And first of all, thanks for coming down, Phil. Before I start talking about that, I want to thank our people, because our people delivered an amazing Q3, arguably the most difficult summer travel season on record. And we, at the same time, delivered our all-time highest revenue performance for a quarter in our history. And even more importantly than that, we did it on only 83% of our scheduled capacity. So the demand environment is really strong. The reliability is back. Our team has done yeoman's work in terms of getting the quality of service back that customers come to expect from Delta. I'll give you a quick factoid. Over the last 45 days, and I'm going to exclude the 3 days that Hurricane Ian impacted us, we operated over 120,000 flights on the main line. We had a sum total of 108 cancellations over that 45-day period. So the demand is back, the reliability is strong, the product and service is great, and so the fourth quarter, I think, is looking really, really good.
You've given guidance of $1 to $1.25. The Streets was going in today expecting 79 cents a share for the fourth quarter, so better than expected guidance relative to analyst estimates. It then sets up the question, is the fourth quarter, which is typically a busy one heading into the holidays, how much of that pent-up demand carries over to the first quarter?
I think the pent-up demand is going to continue. One busy summer isn't going to quench all the demand for travel that we've seen. Our planes have been basically 90% full or more full every day since the 1st of April. And that continues into the fourth quarter as well. The holiday booking period is strong. We're seeing more business continue to return post-Labor Day, and those business bookings are continuing to improve. International markets are continuing to come online. The transatlantic is really strong. We're a bit of a counter-cyclical recovery story, because I know this isn't the story for a lot of consumer brands out there, but as we restore our business, as the demand gets back, as people finally have a chance to move their spending from buying stuff to investing in themselves and experiences, that demand continues strong, and I think it's going to be a really great tailwind into the new year.
You've been around the block a time or two. You've seen recessions, and you've seen the impact it has not only on Delta, but the airline business and airline demand. If we slide into a recession, whether it's later this year, early next year, you think it's going to be different than perhaps past recessions and the impact on Delta and airlines, correct?
I do. I think we're in a counter-cyclical recovery because we're still restoring our operations. Again, remember, we're only 83% of normal capacity that we're operating. Our goal by next summer is to get back to our full capability. And as we bring the scale back to the operations for Delta uniquely, it's going to help us lower our cost. And one of the things you want to do in a recessionary environment is bring your cost profile down. In fact, we're already seeing it in Q4. There's a 10-point reduction in non-fuel unit cost from Q3 to Q4 on a comp basis. So I feel good about the cost profile in terms of how we're going into it. A recession in the airline business generally helps reduce fuel prices, which is good. Our consumers are strong. Business needs to get back on the road with their customers, and I think that's also another difference that we may see in this if we get into a recession. Everyone I know is traveling. And by the way, if there's any CEO out there who's not with their customers, someone else is with them. So I'd encourage you to get back out with your people.
Let's talk about labor. Where do you stand in terms of adding staff? I know you've had a big push in the last year, but there are a lot of questions about whether or not, A, you can increase the way pilots are moving through the training process so that it can help you further add your capacity back in. And then you've got a pilots union that is holding informational pickets, it seems like, every 5 or 6 weeks. Where do things stand in terms of potentially getting a contract done?
Well, two different stories. The total labor picture is good. We're actually back pretty close to the levels that we were in 2019. We've hired over 20,000 people since the start of last year. And now where we're moving into is we're getting out of the hiring mode and into the production mode. When you're hiring that many people, the training and the experience and the recruiting, it takes a lot out of your existing complement, not just your new hires. So we're going to be turning those spigots off. They're largely off now, and it's certainly getting metered down pretty significantly. And next year, they're going to be full ready for production and delivery to our customers. And with our pilots, we're doing a great job at the table. Our pilots are the best. They deserve the best contract. We're working hard to make sure we do that. We've laid out, I think, 22 or 23 of the 28 sections of the contract. It's in that range. It continues to move. We get closer and closer, and I'm optimistic we're going to get a good deal done with our pilots.